bought Saurabh Mukherjea from Marcellus and find out what he's been doing in this market. Saurabh, hi, good morning. Good to have you on the show as always. Saurabh, from the budget time, lots has happened. You've got the US-India deal finally in place. And that said, FIIs also seem to be coming back at least. At least that major chunk of selling seems to be behind us. How are you feeling in the market right now?
No, I think as we had expected for many months that the US-India FTA would be the trigger, the comfort that foreign investors need to reconsider India seriously. I think those months that America had a 50% tariff slammed on us, I think we really were not in the reckoning globally. I don't think any foreign investor could seriously consider us then. But now that it looks like the worst is behind us and the FTA itself, the proper FTA itself will get signed in a couple of months, I think foreign investors are interested again. What's holding back serious money, Aisha, I think, is still the lack of confidence in earnings growth. Earnings growth has been decent this season. I think better than Q2, which was dismal. But given the potency of the GST cut, of the income tax cut that the FM delivered last year, and 125 bips of rate cuts, right? It's literally full on stimulus to juice up the economy. Given all of that, I think the earnings are still not doing justice to the sheer effort the government and the RBI is putting in to revive the economy. And I think that's worrying several investors, including us, right? And we're trying to figure out why is this? Why is that in spite of the government's best efforts, earnings simply refuse to pick up? There are bright spots. I think FMCG has had a good earnings season. Auto has been having a good earnings season now for, I think, a couple of quarters. There are bright spots, but across the piece, in totality, we're still not seeing the buoyancy in consumption that we'd expected. And I think the reason for that is the AI impact, right? I think jobs are going. Companies are obviously keeping quiet about it, but jobs are going. Companies realize, whether it is IT services companies, financial services companies, media, retail, everybody realizes that AI is a major game changer. And the core of middle class India's jobs either are at risk already, or some people have already seeing job losses. You can see the impact on real estate markets such as Hyderabad and Bangalore, where real estate demand has conked off residential real estate demand has conked off pretty seriously. And I think that's something we now need to take into account. The US trade deal is done, or the crux of it is done. People like us are beginning to increase weights in export-oriented manufacturers. I think we're hoping to make more money from our export-oriented manufacturing plays. But I think a lot of focus will now shift on what is the potency of AI's impact in terms of taking out middle-class jobs.
Yeah, that seems to be the case. And I guess that panic, Saurabh, seems to be playing out for the IT services stocks. But tell me, I mean, how much more of selling before we finally see some stability, which one thought came by, in the last 3 months, but that's clearly getting undone now.
I think there's plenty to go here. If you just step back and think about it, there's a broader story, right? If you look at the sell-off in America in the brokerage and wealth management names, the brokerage and wealth management names have lost almost 20% of their market cap in America this week. What the market is increasingly discounting in the United States is not just traditional coding, but almost any type of information intermediation, where an intermediary said, look, I will find for you the best hotels or the best plane tickets or the best strategy to run your business. Any business which is in the business of taking lots of data, condensing it and giving the customer a view and then a service on the back of that view, whether it be hotel bookings or IT services or strategy advice or stock recommendations, that whole piece is at risk. And that really is a big swathe of white collar jobs, even in America, and certainly so in India. So coming back to India, I don't think this is going to be limited to IT services. The disruption AI is causing is a fundamental rebuilding of business models, not just in IT services, but even say in our industry, right? Even in our industry, the role of human beings, whether it's myself, the people who distribute our products, the role of human beings, even in our industry, will be questioned. Similarly, in say hotels, hospitality, and the intermediation of hotels and hospitality, do you really need to go to travel portals to buy airline tickets and hotel bookings, or can an AI app stand between Aisha and her holiday bookings, right? So there are big changes ahead of us in the next couple of years. The internet 25 years ago was the first layer of such changes, where the travel agent sitting in his shop in a high street in Mumbai or Delhi, that guy got intermediated. Now I think this is the next wave of disintermediation, the next wave of disruption, and I think all of us are trying to think through both the impact on jobs and the impact on the business models that we've invested in over the last 20 years or so.
Yes, and probably likely in terms of stock price, Saurabh, the biggest disruption is coming within traditional IT. Do you believe that some of these companies, which are now mammoths in themselves, the business models are likely going to get completely disrupted, or do you believe that we're going to be somewhere in the middle, not completely disrupted, but they're not going to thrive either?
I think there's three layers of impact that we've been able to fathom. There's probably many more that we need to think through. The first is that I don't think there'll be this many IT services companies a decade out. I think we have too many IT services companies, not just in India but across the world, and there simply isn't that much need. I don't think you need American banks to be giving Indian IT services companies. I don't think American banks are going to be hiring Indian IT services companies to use ChatGPT, right? There will be a few elite vendors of IT services across the world, and I'm sure some of the best run Indian firms will be on that list. But I think it's almost inevitable there'll be consolidation in the IT services sector. I think that's the first layer of impact. The second layer of impact is the type of services that will be rendered by the best IT services companies. I think the type of service will change. It'll be far less time and materials. It'll be far less coding. There'll be far more business architecture, strategy advice bundled into it. And I think that will be a big jump that the Indian IT services will have to make. It'll be slightly easier for the Accentures of the world. It'll be slightly easier for the Accentures of the world. But even for an Accenture, I think there'll be a jump that they'll have to make away from coding and selling time and materials to selling strategy and a deep business intelligence. That's the second jump. The nature of the service will change. And thirdly, by orders of magnitude, the number of people employed in this industry will reduce, right? Just to give a broad sense, this is off the top of my head, I think TCS employs 600,000 people. Microsoft would be around 250,000. A firm like OpenAI will be around 2,000, and I think DeepSeek employs 200 people, right? Now, I agree that they're very different businesses, but that gives you a sense, 600,000 for TCS and 200 people for DeepSeek. It gives you a sense of, by orders of magnitude, what's coming towards us. Till 3 years ago, this was India's largest job creator, this sector was. And as we know, in the last 3 years, it's barely created any jobs. In fact, from what I can see in the Naukri numbers, Naukri publishes very interesting data on this. InfoEdge's main standalone business, Naukri publishes very interesting numbers. This sector is shedding jobs already at the rate of 10-15% a year. So that story, I think, has a long way to go. So 3 different layers of changes: consolidation, fewer firms. Secondly, the nature of service rendered, I think, changes fundamentally. And thirdly, the number of people employed by the sector, I think, dramatically reduces in the years ahead. But what the last week in America is showing us is not just going to be confined to IT. I think even our industry, asset management, wealth management, will also be the next step to have to reconsider how we render services to our clients.
How are you playing this, Saurabh? So, of course, IT will be large baskets for many Indian investors. How should one rewire to the new normal?
Right. So we're trying to think this through. I think there are some big rewirings required. I won't be able to give you the full details of what we are thinking through here, but broadly speaking, what we are trying to think through is, do we shift in India? Do we shift from being a consumer-centric economy, where consumption is 60% of GDP, consumption driven by prosperous professionals who work in sectors such as IT services, such as media, retail, banking? And do we shift from that to becoming an export-centric economy, much like the Southeast Asian nations, on the back of a far more competitive currency? My reading is the rupee will lose more value. It'll go towards 100 over the next couple of years. So do we become a more Southeast Asian type economy on the back of a far more competitive currency and on the back of these outstanding free trade agreements that the government has negotiated, right? I've said, I think in previous interviews, lot of credit to the government to Piyush Goyal ji for pulling off these FTAs. This could be the making of India, given that IT was going to go anyway. I don't think there was any stopping the AI disruption and the damage it was going to cause to the conventional IT services model. This could be the remaking of the Indian economy with a far more competitive currency and a more export-centric, manufacturing export-centric economy. And therefore, for people like us, I think there's a lot of work to be done to understand how quickly that shift will happen and who are the companies who will do well, who are the manufactured goods exporters who will thrive in this new reality that's coming towards us.
Interesting. Saurabh, do you think for now one is safer betting on AI consumers, banks and the likes, as opposed to figuring out how to actually get into the AI trade?
So I think the way we are thinking about it, Aisha, is that the lenders, large financial services companies, they will be reasonably agnostic about who their clients are. So if there are fewer IT services employees in India, if there are fewer tech employees in India taking bank loans and buying mutual funds from the high street banks, but there are more manufactured goods exporters who need foreign exchange, who need working capital financing from the banks will say, hey, that's just fine. The economy is changing and we will cater to the changing needs of the economy. If anything, the tech disruption is making it lower cost for the banks to expand. So if you look at HDFC Bank's annual report, and we've been shareholders for many, many years in HDFC Bank, it's remarkable how much HDFC has grown in the last 5 years or so. They've added 1,300, 400, 1,400 branches a year, but headcount has moved very little, right? So an HDFC Bank or a Bajaj Finance, you're right, have been very clever, very efficient users of tech. And these large lenders will say the economy will change, the borrowers will change, there'll be new borrowers, some of the old borrowers will fade away. But hey, we can carry on making money and perhaps even become more efficient courtesy the use of tech. And therefore, I'm seeing the large financial services companies, the large lenders as being less exposed to the tech disruption that's coming towards us. And potentially the best run lenders could benefit from becoming financiers of global trade for Indian manufacturers.
That, of course, gets me to SBI, now the fourth most valuable listed company. What's the take there, Saurabh? I mean, excellent profit growth, stable margins, improving asset quality, and still very cheap.
Yeah, so we've been bewildered by this, right? We've been completely left behind by the PSU bank rally. We've never invested in one. We don't plan to invest in PSU banks, but blockbuster results, not just from SBI, I think even Punjab National Bank, remarkable numbers. And the reason we've not invested in this is we foresaw the earnings slowdown coming. We foresaw the economic slowdown or the earnings slowdown coming. The earnings slowdown has come, as we're discussing, right? We're still in the midst of that in spite of strenuous efforts by both RBI and the government of India to revive earnings. And we stayed away from the PSU banks, and we're a little bewildered by the whole thing because on the one hand, a well-run lender like Bajaj Finance is basically warning of irrational exuberance. Bajaj Finance is increasing provisioning. In SME lending, good lenders like Bajaj and Chola are highlighting elevated NPA levels. And at the same time, in the same economy, the PSU banks, by and large, all of them, the PSU banks are growing their SME or their corporate books by 20%, and they're reporting pristine asset quality. So we're a little bewildered by this. How can two sets of lenders in the same economy have such different outcomes? But those who have invested in PSU Bank, congratulations to them. I think the PSU Bank index is up 35% YOY, and we in Marcellus haven't invested in a single one of these PSU banks. We've been left waiting and watching as not just SBI, but even the PNBs of the world have delivered blockbuster numbers.
No, Saurabh, firstly, really appreciate you candidly coming and saying that, calling that out. But Saurabh, the first theme we spoke about at the start of this conversation was with regard to consumption in India and why it hasn't really picked up. If it were to pick up, how best would you like to play it, at least at this point, given valuations and given the structure of the economy? How best would you play consumption?
So I think I would go back to the sort of old line classic consumption plays that have characterized India for many years, right? So the building material companies have had a rough run, not just Asian Paints, but say even a company like Astral Poly has had a rough run. A company like Pidilite has had a better run, but both generally building materials has had a tough run. As I'm sure you're seeing, even real estate, residential real estate is seeing a downturn, which further exacerbates the challenges of the building materials sector. FMCG has begun to recover courtesy the government's tax cuts. But even on FMCG and in auto, we're only in the early stages of a recovery. So if we were to see job creation return, I think that's the single most important driver of earnings recovery. We need to see white collar jobs coming back. We haven't seen that in the last 3 years. And I worry about white collar jobs because of the coming AI disruption. If white collar jobs come back, then I think consumption will pick up. Consumption picks up. Given that consumption is 60% of GDP, earnings will pick up. Right? I think those three are linked. If earnings pick up, then our traditional plays like an Asian Paints, like an Astral, like a Pidilite, like an Eicher Motors, like a Escorts Kubota, the entire auto, FMCG, consumer durables, and building materials pack should do much better in the next 2-3 years than in the last 2-3 if jobs were to come back. But at the moment, the reality we are grappling with is perhaps what's coming towards us is a very different India, when it's not so much white collar jobs that will come back, but blue collar jobs in factories, in Hosur, in Coimbatore, in Chennai, in Gujarat. Maybe that's the future of our country, as opposed to IT workers sitting in business parks in Hyderabad, Bangalore, Pune, Gurgaon.
Interesting. Okay. Great to have you, Saurabh, on the show as always. Good to be chatting with you.
Thank you so much, Aisha. Thank you.
Let me just revisit where the market is